let's think back to this. Okay, so in November, when nearly all of these price-to-sales stocks were starting their sickening slide, no matter how much you might have liked your Allbirds or Wheels Up or 23andMe or Nextdoor or Oatly or Rent the Runway, these stocks are getting killed. Then how do they rally now? Well, if you sold them because of inflation worries, like so many professionals did, then wouldn't you want to buy them back now that the Fed's cracking down on inflation? That makes sense to me. It's exactly how a short can become a long, at least for a couple of days. Now, I'm actually describing two different dynamics here. First, we've got the somewhat desperate attempts by hedge funds to find something wrong, then get short, then make a loud public case about why you're right and everyone else should be afraid. The second dynamic is more straightforward. It's just the classic hedge fund playbook that tells you to flee the flimsy and hide in the tried but true going into a rate hike. But the first dynamic is hidden by the obfuscation of money managers who don't want to admit that they're just trying to foment panic. That's against the law. And the second is hidden by the unseen disease, multiple contraction. Many think the answer to this conundrum is to forget stock picking entirely and just go buy an index fund. That was certainly a theme today. I disagree. As I constantly tell CNBC Investing Club members, I think the solution is to stay out of the crosshairs of the young, money-losing stocks, many of which should never have come public and came way too early, and instead just find some solid, tangible companies that make things and do stuff that you like. And then they distribute to shareholders like you generous dividends or buybacks. But the key is to not be taken in by plausible-sounding arguments that turn out to be totally untrue. So here's the bottom line. Many investors are leaving what they believe is a rigged casino rather than understanding that the market's not a casino at all, just a place where it is, unfortunately, very easy to make mistakes. Even the smartest money managers are going to be wrong a lot of the time. If you're right 60% of the time, you can make a killing in this business. So please, don't take everything you hear as gospel.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.